Hello fellow traders! Today we will talk about how to efficiently use price action and breakout strategy for binary options trading. Although indicators can be useful tools for market analysis, they are often late and can lead to missed opportunities or late entries into a trade. And that is why I believe that every trader should study price action in order to become more successful. In the last video, I set myself to the task of opening 9 successful deals in a row and getting the balance from $10 up to $1,000. And I practically did not use indicators, but I relied on price action strategy. And many of you are interested in transactions opened using the breakout strategy, and today I will analyze it in detail so that you can apply this knowledge into your own trading experience. Getting intrigued already? So don't forget to like up this video and send it to your friends, because your likes and comments help the channel grow and create more high quality content. So let's start with the main thing. What is a breakout? In the process of price movement, it forms patterns based on levels, and here are some of the most common patterns I use. So first of all, this is rectangular pattern, so classical support and resistance. In this example, we can see the definite line of support from which the price is jumping up and down, and we also see the definite line of resistance from which the price is jumping down and up. So the price is consolidating inside of the zone. A lot of traders love to call this one a flag, but genuinely this is just an uptrend or a downtrend. Let's see at our example. Here we can see that the price is moving upwards and each low is being higher than the previous one. So we can draw a trend line connecting the dots from bottom up, and we can see an uptrend. And also we can connect the higher highs from the bottom up as well. We can also see that all of the higher highs are being updated, and this is a classical uptrend where the lower lows and higher highs are being updated higher than the previous one, and both trend lines are going upwards. The same thing can be used with the downtrend. Of course, you can see that our higher high is lower than the previous one, and the lower lows are also lower than the previous one. This is a downward trend, and this is a flag going down. And the next pattern that you can see quite often on the chart, this is a triangle. Right here we can see that higher lows are being updated. Each low is higher than the previous one, but higher highs are not being updated. And the price is basically drawing us a triangle, and I think you understand why it's called triangle. And also this pattern you can see on the market going up, but also with the market going down. So in the case of market going down, there's going to be a line of support downstairs, and the dropping line of the trend line is going to be closer to that one. And the last pattern, this is Pennant, and in this case you can see that each high is lower than the previous one, basically downtrend forming, but at the same time each low is higher than the previous one, an uptrend. And if in this situation we have trend lines going down and up, that means that this is going to be Pennant pattern. All these patterns indicate price consolidation in a certain zone, and after the consolidation, when trading reaches a required volume, the price breaks through the pattern, and this is a breakout. Do you want to understand market analysis better and master effective strategies? Join my online academy, where I share my knowledge and experience and get free access to lessons on technical analysis, indicators, and more. Text me on my Telegram, the link to which is, as always, in the description box and down below. Let's look at what we have in this case. Right here we can definitely see our resistance line right here, and this is the level reaching to which price is going to jump back down. And also we can definitely see our support line, and this is the level which price reaches and basically jumping back up, obviously. Our task right now is to see what's going to happen next with the price, and right now we can tell that the price jumping outside of our levels, basically breaking through them, and that means from this point we could enter into a deal for a downtrend, and let's see what's going to happen then. It would be closed in black because price is moving down. And of course, that's going to be a breakout. But it's really important for you to understand that if you're going to trade like this, every single time the price is going to go outside of those levels, you're going to lose a lot of money. Because if you look closer, a lot of traders would think that breakout happened right here at this point, but we can definitely see that the price moved back up. So that's a false breakout. And it's really important to understand that not each breakout is going to be an actual breakout. Now let's look at this situation. So right here we can see that higher lows are being updated, and that basically creates an uptrend under the chart. But at the same time, we can see that the price is banging into the resistance level and not moving higher. So that's how we get our triangle pattern. And from here, we understand that there's going to be a breakout. But at the same time, right now, we don't know when it's going to happen and where the price is going to move up or down. So we need to get additional confirmation, as always. So with the last candle that we have here, it's breaking through the trend line. And a lot of traders would open the deal right here for the downtrend. And let's see what's going to happen in 3 minutes with this kind of trading. And the price moved a little bit down, but still at the same time, it jumped back up again. So this deal would be closed in red. Why is it a mistake? And why you shouldn't do that? First of all, we need to understand the momentum with which the price broke through the trend line. Of course, we see the really thick candlestick, but only a little piece of this candle jumped outside of the trend line. And also we have a gigantic shadow under the trend line. And basically that means that the price moved down, but got back up and closed in that level. So that tells us that the pressure of bulls was too hard and bears couldn't pull the price lower. That's why this deal would be closed in red. But more experienced traders would look at this situation further, and we can tell that the price is still jumping back up and down in the same level. But here we see another breakout. The price jumped outside of the levels and going down. Would you enter into this place? No, because we again don't have the confirmation. We have the momentum, but it's a really small candlestick, so that means we need to wait for another candlestick, and the next one is actually really good. It's a gigantic red candlestick with a small shadow on the bottom, and that means that there is a lot of pressure from the bears, and we can enter into the trade right here, and let's see what's going to happen in 3 minutes. And of course, it's going to be closed in black. Even though the price moved a little bit up, still in binary options, this is more than enough. When you're trading with breakouts, it's really important to be really slow. You need to think critically and evaluate situations. So let's look at our example. Right here, we can definitely support and resistance lines, and the price is moving along those lines, and the first potential point of entry. The price moved up and dropped down. So we have a gigantic momentum candlestick. So of course, right now, we don't have enough confirmation to enter into a deal, and we're gonna try to find other potential points. The next candlestick is showing us that the previous one was a gigantic momentum with a lot of power. Price broke through, but the next one shows us that momentum would be over here, might be over, because the price moved lower, but at the same time it was pushed back because we can see the shadow on the top, and there is not enough pressure. Again, that's not enough confirmation for us to enter into a deal for the downtrend. Next ones, we can see that the price is growing again and going back to our zone, so that would be a potential loss of money for you. Let's look at what's going to happen next with the price. And right here, we see that the price reached the top level, and from here, of course, we're gonna try to find entry points for an uptrend. So the price broke through the top level and is fixated on this spot. We see again gigantic green momentum candlestick, but the next one is smaller, and the next candlestick is even red. So that shows us that this is not a good point, because bears are trying to get control of the market and get our candlestick candlesticks, or back down, get our price back down. Let's continue looking what's going to happen. The price is going up and down, and we see at the same time that shadows are gigantic. So that means bulls are not having enough power right now, and the price is consolidating in this zone and not moving upwards. So there is no good signal for us. Let's continue watching, and as you can tell, the price is dropping and still moving along the sides of our levels. Then right here, the price went outside of the level again. The next candlestick again shows us the loss of momentum. There was momentum, a lot of it, on the previous candlestick. The momentum was lost and the price is going back up again. No potential entry points here. Another point right here, the price is again going outside of the level, and again we're trying to find potential points for entry for a downtrend, and the next candlestick obviously shows us there is no potential there. Moving on to what happens next, and we can here we can see that the price is going closer to the line, and we need to see what's going to happen next. And right here we see that getting up to the level, the price breaking through it, the next candlestick, the third one, bulls tried to push the price up, but the price went even lower. That means that we see that bears still have control over the market, and the next candlestick is going to be really important. If it's going to be the green candlestick or a candlestick with a big shadow, we are not going to enter into a deal. So, and we see here that the next candlestick is again, bulls were trying to push the price back up again, but it didn't work, and the price dropped down, and we have a little shadow on the bottom, and we understand that from this point the momentum is growing, and that's what we want with the breakout. So from this point we can finally enter into our deal for a downtrend, because we have enough confirmation. Even though we didn't use any indicators, you can only look in the situation on the candlesticks, and as you can tell, in this situation the price is going down, and this is a successful breakout. Thank you for being here with me in this video, and I hope that now you have a better understanding of how to use the breakout and price action strategies in your trading. Don't forget that success in trading depends on discipline and constant training. You can also watch my video right here where I have analyzed 3 best strategies in 2024. And that's going to be it for us for today. See you in the next one. Bye bye.